first day of the Metals Investor Forum in Vancouver. I'm Joe Mazumdar with Exploration Insights. So I'll do a little discussion on something I talked about recently at the CRU World Copper Conference down in Santiago, Chile, more than a month ago. And after that, we'll have company presentations by Advantage Lithium, Evrim Resources, and Fireweed Zinc, all of whom have, interestingly enough, released some significant news this week. So we'll just get started. That way you guys can get to your beers quicker. And also, so you know that right after the session, we'll have Q&A in the Bowden room, I think it's called, right over there. Okay, so let's get started. So this talk is about copper exploration trends. So we talked before and a lot about gold, but you know, copper is getting a lot of momentum based on its use in electric vehicles and the future of that kind of demand, and that's propelled a lot of the underlying positive sentiment for copper. So underlying that, we tend to focus on exploration, and so what I tried to do was look at exploration specifically in copper. So what we're going to talk about is why bother with exploration in this sector, the underlying trends, and different strategies for companies in the copper sector, and then we'll just close out. So similar to gold, you bother with exploration because we've seen a drop in grade. And copper is definitely more cyclical, shorter cycles, intense, and you need to live through the cycle. You can't keep shutting down and turning it off. You want to be in the lower quartile, such as the higher quartile production is the one that goes offline, and you don't. And exploration is the way of finding these new deposits. So the drop in grade, so this is from CRU, from 2002 to basically 2017. You see Chile, which is the major provider of copper in the world globally, and you see the rest of the world. Similar trends, down, 30% drop in grade over 15 years. And we've seen something similar in the gold sector, but that drop's been more. It's been almost half. So the trend is the same in both. But gold has been more intense because during that time, gold prices have been going up and people have been adding a lot of marginal grade. So the whole idea here is, like when I work for RTZ or many of these big companies, is always try to find deposits in the lower quartile to live the cycle out. When the cycle is good, you'll make a lot more margin, but when it's bad, these guys might get cut out. You don't want to be on that side. You want to be on this side. Because copper mines aren't 10-year or 5-year mines. They're 20 to 30-year mines. And so the ability to stay open and produce is a paramount importance to companies. And so right now we'll talk about the trends in exploration, the downward trends, grassroots proportion of the entire exploration, and how Latin America plays its role in copper. So this is very similar, and I'll show you this in gold as well, but you see this big increase from a low base in copper exploration to a 50% compounded annual growth rate to the global financial crisis, and then a big drop. Then another intense increase post the GFC, and then this is the trend we've been living. And just recently, we've seen a pickup in exploration, which is important. But what I want you also to focus in on is the proportion of grassroots exploration of the total exploration. So early when exploration was at low levels, there was a much higher proportion of grassroots exploration, almost well over half of it. But now, like down to the global financial crisis, it went down to about 30%. It's been increasing since that level. So we have seen a steady increase since the global financial crisis in grassroots exploration as a proportion of total copper exploration, which is a good thing in terms of the sector. This is not the case in gold. So I've shown this slide before, but it's interesting to contrast it. We've seen this secular decline from 2001, 2002 in gold, and it has not abated. So you've gone from about 50% of total exploration expenditures being spent on grassroots to 20, and that's basically where we continue to sit. And now the focus on Latin America. So I gave this talk in Chile, and what you notice is that when total exploration expenditures are low, people will go to the jurisdictions that are mining friendly and have operations. And so that's mostly Chile and now Peru. And so a much higher proportion of the exploration expenditures when the total exploration expenditures are low happen in South America. When the exploration expenditures increase, people are more willing to take risks, and you see more exploration expenditures taking place in Asia and like here in Africa. But you see African exploration expenditures here in 2012, and you see it here now in 2017. So a much lower proportion. Latin America, in terms of overall, is like an underlying component of exploration in copper. It increases by less in better times, but it's got a support here that it doesn't go under, because Chile and Peru especially are very important in the copper sector. Okay, and so now we'll look at how companies have divergent strategies with respect to growing in the copper sector. So what we've seen, and this was from 2017, different than gold, is that majors actually account for the majority of exploration. You know, when we look for copper plays, we find it difficult to find juniors doing copper. One reason is that it's more expensive to explore. The drilling costs more, there's more drilling required to delineate the deposits, and they tend to want to find a partner quicker. That's not necessarily the case for gold, but it's definitely the case for copper. And so the junior explorers only represented about 10 to 15% of total exploration expenditures. So that's why it's harder to find juniors with copper exposure, like total copper exposure, that have 100% of that project. But what's interesting is the component of about, you know, well over 2/3 that's majors, meaning cash flowing producers. So the issue here is that there's not a lot of financing risk for them. And I'll show you why not. So if we look at the exploration budgets in 2017, so what I did here was I basically partitioned it by grassroots, brownfields, and advanced projects. So brownfields would be close to a mine, advanced would be somebody going from a scoping study all the way to a feasibility study, and grassroots would be just drilling. So what you could see is all these guys are producers, and they represent about 60% of the total exploration expenditures in the copper sector in 2017. But you could see a lot of divergent strategies. The average is about 30%. But you can see some, like my former company, Rio Tinto, who spends the most. And they also have the highest proportion of grassroots. And why? Is because they find it difficult to find the deposits they need to move their needle. And so the only way to find them is to do grassroots. Brownfields is not going to do it, and they are not big on acquisition right now because they got burned before. So you could see a few outliers here in terms of being much greater than the 30% average. But you also see some people that are much below the 30% average. And so when you see these people, their strategies will be much different than those people. So let's take a look at this. So those companies so that 2/3 of exploration expenditures being in the hands of majors, what you'll find is that there's very little financing risk for them. So in 2017, on average, these guys generated about $4 billion of free cash flow. So it's not like the gold sector where we're, oh, are these guys going to get funded, you know, or do they have to go back to the market? Do they have to sell a royalty? I mean, 70% of that exploration expenditure is well backed. And these guys have working capital positions. So a lot of these guys who are doing a lot of exploration, the average working capital position is well over $5 billion. Even the smaller guys are about $0.7 billion. And smaller guys, I'm including Teck and First Quantum. And so let's go back to that chart I showed you before, and let's take a specific example. Let's look at Lundin Mining. So Lundin Mining, we know, have just put out a bid with another company, Eurosun Mining, on Nevsun. So it's topical. It wasn't topical when I did this presentation in Chile, but it certainly is. And I did this graphic then about how they're mostly grow by M&A. And so you could see that at one point they did have, like if you look, this diagram is about how much they spend on G&A, admin, and how much they spend on exploration expenditures as a proportion of revenue. So you got two things moving, but for me it's sort of a proxy of saying how important is either one. So they've declined, and now they're happy with about 2.5% of their G&A of their revenue. But we can see a big decline here in terms of exploration expenditures being a proportion of revenue, because they're pretty happy with growing through exploration. And the question is right now, is the next dot Nevsun? But acquisitions to grow is definitely their mantra. And they're well below the 30% with respect to total expenditures being related to grassroots. They're not keen on grassroots. Most of their exploration's around known assets and what they're already doing. So let's take another one, Freeport. This is another company I used to work for when it was called Phelps Dodge. They're actually over the proportion, but they spend much less than companies like Codelco or Anglo or Vale or Anto or even Rio. So their trend on SG&A has been higher, and their proportion of exploration has been lower. And that's been declining, and this is like less than 0.5% of their total revenues actually spent on exploration. And within that, they spend a good proportion of that now on grassroots. But still, the overall budget isn't ridiculous. And we'll take another look. I mean, Teck is a bit more complicated. It's not a pure play. It's zinc as well as copper and coal as well. But if we look at the details behind Teck, I mean, they spent at one time up to 2.5% of their revenue on exploration, and that's been declining to basically Freeport's level of less than 0.5%. So if you look at it from Freeport's standpoint, and as well as Teck's, they'll want to do more joint ventures and earn-ins right now because they can't generate projects. So they'll be willing to and want to look at more joint ventures and earn-ins with the prospect generators or with exploration companies to get assets into their pipeline. Because if they're not acquiring, there's got to be another way to feed their pipeline because they're not generating projects through grassroots or exploration. So what is happening is that what we've been seeing and what we've harped on before in this conference is that majors funding juniors. And we've seen it in gold, we've seen it in copper, and we've seen it in zinc. The box just highlights two of them that are really into copper. Like Newcrest is mostly gold, but it's also got a significant copper component. They've been significant acquirers of joint ventures, earn-ins, private placements. The big one here would be the Lundin Gold private placement. They're also in Sol Gold for the copper gold project in Ecuador, and they're also in another prospect generator we own, Mirasol, doing joint ventures in Chile on on gold projects, on high sulfidation epithermal projects. But South 32, when it came out of the BHP transaction, it had very little assets to go with, especially very little copper assets. So part of their placements, they're very active in terms of their investments, and they're in two major ones, which would be Trilogy, which has got the copper asset, Bornite, and the Arctic in Alaska, but they're also in a zinc project in the Arizona mining. So you could see that happening. And so what we should see is more of that happening with the ones that underspend in exploration. We should see them trying to fill their pipeline in copper with more joint ventures and earn-ins. But problematically, there's not a lot of companies doing grassroots explorations on the junior side. It's like, again, I said 10 to 15% of the budget is in the hands of juniors. So there's not a lot of people to do deals with. So, are they going to be acquiring? Is there going to be more of a bid for those companies that do have assets? That's really going to be the questions, because they'll have to wait for the Rio Tintos to do their exploration on projects and find out that they're too small for them, and then try to take those projects on. Not unlike what Lundin Mining did with the Eagle Nickel project. That was something that Rio Tinto found. It was too small for them, and Lundin acquired it. But we have seen more acquisitions in the mid-tiers. So maybe a month ago, we've seen Copper Mountain, BC porphyry, a copper producer, actually acquire a project in Queensland, Australia, where I used to work. It's called the Cloncurry Copper Project, which is interesting that a company that's actually working in the Golden Triangle actually went all the way to Australia to acquire an asset. And then you have Oz Minerals, which is a big ASX-listed, mid-tier ASX-listed company in Australia that acquired a Brazilian company with copper assets in the Carajás district of Brazil. So you see a lot of movement happening as people know they don't have the pipelines and need to expand and are looking to acquire projects. So will we see more of that? I believe so. So in terms of summary and conclusions, okay, exploration, specifically grassroots, the whole idea with grassroots exploration is that what we know right now is not sufficient to arrest the negative grade trend and find lower quartile deposits. We know that, obviously Rio Tinto knows that, hence they're spending 75 to 80% of their over $100 million exploration budget in copper on grassroots. The proportion of grassroots exploration project has fallen, but rebounding, and there's always been a focus on Latin America. Latin America won't go away in terms of a budget. Peru and Chile are definitely the primary areas for people to explore, even given the issues with Chile and getting concessions there. People still want to be in those areas because the endowments in both of those countries is significant. Majors are producing. They're spending the most on exploration, like I said, about 70%. They've got significant working capital positions, so there's no financing risk there. Those with the 30% or greater budgets with exploration budgets on grassroots recognize the importance of finding these new deposits. And the other ones, like the Lundins of the world, they're going to be more keen on M&A, and other people potentially more keen on joint ventures and earnings. So in conclusions for us, a commitment to grassroots exploration in the copper sector is better than in the gold sector among major producers. So we're seeing a move from 30 to 40% of exploration expenditures being spent on grassroots, whereas we're at 20% in the gold sector. The majority of copper exploration is well-funded, hands of positive free cash flowing majors, so that's going to happen regardless. Latin America is still the #1 focus and will continue to be. Once the risk goes off and people are more interested, the problem is that if you're going to be hit by a $1 billion tax bill in Tanzania, if you've got a civil war in the DRC, it's going to be harder to work in some of these areas, especially when you're talking about a 30-year mine life. Again, smaller budgets will tend to do joint ventures, and Evrim will talk about a joint venture that they have with a significant Chilean copper producer, Antofagasta Minerals. So we'll see these continue to happen. Okay, that's good for me. Thank you very much.